Welcome to the Stock Market Daily News Podcast. It's Sunday, April 5th, 2026. I'm here with your concise roundup of yesterday's market action and the news every trader and investor needs to start the week ahead. It was a turbulent session for U.S. equities as major indexes took another hit. The S&P 500 shed 1.4%, closing below 4,700. The Dow Jones slipped nearly 1%, while the Nasdaq fell 1.8%, dragged down by renewed tech sector weakness. Oil prices surged above $100 a barrel amid ongoing Middle East tensions, adding to inflation jitters. But under the surface, some pockets of resilience stood out. Let's break down the stories moving the market. First up, the market's heavyweights are facing skepticism. Richard Bernstein, who manages a $19 billion portfolio, warned this week that we could be facing a lost decade for the S&P 500, echoing the flat returns after the dot-com bust. Bernstein points to an inflationary environment reminiscent of the 1960s, with defense spending and fiscal stimulus heating up prices. He's telling investors to rethink exposure to large-cap growth, especially tech, which now makes up a third of the S&P. Instead, he sees opportunity in value stocks, small caps, high-dividend pairs, gold, and short-duration bonds, assets that outperformed during previous inflation spikes. The takeaway? Diversification and a tilt toward undervalued sectors may be key as macro risks mount. Shifting gears to tech, Wall Street's relationship with artificial intelligence stocks is changing fast. After 2 years of throwing cash at anything with AI in the pitch, investors now demand results. Take Alphabet, trading near $3.5 trillion in market cap, but with real net profit of $132 billion in 2025, its 24 times earnings multiple looks justified. The focus now is on proven earnings and margin expansion, not just visionary promises. Meanwhile, hardware names like Marvell and AMD, building the chips that drive efficient AI computations, could be the next battleground as demand shifts from training to application. The big message: it's not enough to ride the AI hype. Each company must show how it's turning innovation into profits. In a big move for market structure, the New York Stock Exchange and Nasdaq are racing to launch 24/7 trading. The reason? Extended hours have long given brokers and market makers too much power to influence opening prices, sometimes at the cost of retail traders. Experts suggest that round-the-clock trading will level the playing field, letting all investors respond to global news in real time. This shift could reduce weekend gaps and volatility spikes, benefit traders with more liquidity, and force brokers to adapt. For investors, it means more access, fewer surprises, and potentially tighter trading spreads, but also a need for discipline in a market that never sleeps. Turning to international stocks, India's small-cap sector was a bright spot amid a broader sell-off. While the Nifty index dropped over 11% in March, 10 standout small-cap names soared, some by more than 70%. Confidence Petroleum, RPSG Ventures, and Ganesha Eco Fear all posted double-digit gains despite the volatility. The contrast underscores how, even in risk-off markets, nimble stock picking and sector rotation can deliver standout returns. Finally, in financials, AU's Small Finance Bank of India reported a 23% jump in deposits and 25% lending growth in Q4. However, the stock is down 13% this year amid heavy foreign outflows and sector-wide pressure from rising oil prices and geopolitical instability. This highlights the disconnect that can emerge between company fundamentals and market sentiment during times of macro stress. Before we go, here's a rapid recap. The S&P 500 closed at 4,732, the Dow at 36,400, and the Nasdaq at 15,078. Defensive sectors outperformed, tech struggled, and macro uncertainties, from inflation to geopolitics, drive a cautious market. Looking ahead, keep an eye on this week's earnings reports from major tech and bank names and key economic data, including inflation numbers and Fed commentary, which could set the tone for April trading. Don't forget to subscribe, visit our website for daily updates, and follow us to stay on top of market moves. That's your fast market briefing. See you tomorrow.